Hey guys, Mariko Berg, Realtor with BRIDGEWELL Real Estate Group. I am sitting here today with Kevin Oake, mortgage broker, and I wanted to do something a little bit different for you guys. So we're going to be breaking down the importance of pre-qualification when you are looking at purchasing a property and just getting that done before an accepted offer and all the reasons why you should do that. So here's Kevin. He'll introduce himself.
Hi there, my name is Kevin Oake. My son Ryan and I are the owners of Oake Mortgage Services, and we have the great pleasure of working with Mariko and the BRIDGEWELL Group. And I'm happy to answer any questions and enlighten you as much as I can today.
So yeah, really we just want to start off with the purpose of talking to a mortgage broker before writing an accepted offer. And I think that it's really important to get that done beforehand, just because you want to know what you can afford before you go out and start searching for something, only to find out that maybe you can't afford it afterwards. So that's really where Kevin comes in, and he can get the process started for you. So what is the starting process of getting a pre-qualification?
Well, generally for us it's just understanding income, understanding your down payment, and understanding your liabilities or debts. So once we have all that lined up, it gives us a pretty good indication of what your affordability is. I like to call it a pre-qualification because at the end of the day the property is going to be a big piece of the puzzle. And if the lender does not approve the property for a variety of different reasons, it doesn't happen often, but it does happen once in a while, you just want to have some preparation in place. And obviously financing conditions are ideal because it gives us some time, or the lender time, to do their due diligence on both you and verifying documentation as well as the property and verifying its marketability.
Cool. And so the way that I kind of see it is like it's separated into two parts, and like correct me if I'm wrong, but I kind of see it as like pre-qualification before you get the accepted offer is like you approving the income to a certain extent, or like reviewing the income, and then once you get the accepted offer, then it's like the lender reviewing and approving the property itself.
Exactly. So we're essentially left to underwrite the file for the lender or for the client in general, but reviewing documentation on employment, and it could be, the simple one is a salaried employee. Just provide a job letter, states the tenure, the position, the amount of pay, and a pay stub. It's pretty straightforward. But when you get into people that are working hourly and maybe have switched jobs fairly recently, switched industries or careers, or business for self, it gets a little more complex, and we need to sort of go through that to make sure that the documentation supports the income that you may think or the client may think they earn, and the lender might not feel the same based on the documentation. Generally, when you get into business for self or hourly employees that are working maybe in a different industry or switch jobs, we'll have to refer back to CRA documents, generally the T1 generals, notice of assessments, make sure there's no taxes owing, and just make sure there's some consistency, because they're going to want to have at least 2 years of history to average things out for income. So that's the big one. And then we also have to verify down payment funds, and generally they need to be verified as being in your account or your possession for 90 days. That's part of the anti-money laundering legislation that we have in Canada. Prevents money being laundered through real estate. So those are the key things. And then credit, touched on, but it's a big piece of the puzzle. We need to have a credit report whenever we submit a file, whether it's a live file, in other words, you've got an accepted offer, or you're going to refinance or renew your mortgage. But the credit report outlines your liabilities. It gives a score. It basically is an overview of your history. So if you've got late payments, it's going to work against you. If you've got a history of maybe bad debts or accounts that have been closed, or we have to find a way to work around that. Generally, we need to provide a story, but not a lot of people get their credit reports or know what's in their credit reports. So I can't share that with the customers, but I can also sort of outline where the issues may be, if there are any issues. But those are the three big things, being income, down payment, and credit for our side of things. The property is the big one that I can't do much until we see the actual property. But the lender will definitely do some due diligence on all four of those pieces. And yeah, that's the heavy lifting.
Awesome. And just a note on that as well, I think that it's really important that your mortgage broker and your realtor work actively together. Kevin can help to get through the whole pre-qualification process, but once you get an accepted offer, it's really important that we're working together, because I need to be able to send the information on the accepted offer, the Form B documents if it's a strata property, property disclosure statement, and basically get your mortgage broker everything as soon as possible so that the deal can really come together and make sure that everything's done within that subject to financing constraint. But going back to that credit report, I think the question that we get quite commonly is a concern from the client about pulling credit multiple times. And whether that affects a credit score in any way, and I think that that's something that probably comes up often for you when you're telling people that you're going to pull their credit.
Yeah.
So do you have something?
Well, generally, when there's a credit request for a mortgage product, it doesn't have an impact, a negative impact, and I've been told this by representatives from Equifax, who generally is who we refer to for any of our credit requests. If you're going to apply for credit cards, car loans, those are coded differently than a mortgage request, and we through Dominion Lending Centers have we're coded as a financial mortgage provider. So the theory is that a mortgage inquiry, if there's multiple in a 90-day period, it may be most likely considered proven. The customer's looking for a good rate, they're checking a bank maybe, and they're checking with a mortgage broker. So there isn't a negative impact for a mortgage broker or a bank lender or credit union lender to request your credit report. Now, if you're doing it multiple times throughout the year, it might add up, but generally within a 90-day window, you're given, I can't remember the exact figure, but you're given some leniency for multiple requests. Because the other trick to that is most lenders need a credit report that's current up to 30 days. So if we're doing a pre-qualification today and nothing comes together for 60 days or 45 days or even 31 days for that matter, I'll have to request your credit again. So again, with the coding, they understand that mortgage inquiries are prudent in terms of trying to get the best rates, and a home is looked upon as a little more responsible than an additional credit card or a new car or something that's more in consumer depreciating asset, maybe is a better way to look at it. So yeah, it's not a negative if you've got credit requests on a lender mortgage side of things.
Cool. And so yeah, guys, that really covers the pre-qualification process, and just remember that it's really important to get this done prior to getting an accepted offer, because really you just want to know what you can afford, and there's a lot of different moving pieces that all add up to make it a little bit more obvious as to what you can actually afford. But just remember too that you are going to have that property approval portion as well. And so a lot of the times I think that pre-qualification and pre-approval can be used synonymously, but they're not necessarily synonymous. You don't have an approval just because you have a pre-approval. Really, when you're talking to a mortgage broker beforehand, it's just that you have that pre-qualification. You're not going to have that approval until Kevin goes through the whole process, talks to a lender, gets the underwriter to look at it, and you basically have the go-ahead and the commitment. So just remember that it is really important that when you're looking to purchase a property, that you're getting all of these things lined up beforehand, talking to a mortgage broker, talking to a realtor, just getting a really good idea of what you can afford. But if you have any questions, just let us know. Again, my name is Mariko, realtor with BRIDGEWELL Real Estate Group. This is Kevin Oake with Oake Mortgages, and we're happy to help if you have any questions. Have a good one, guys. Thanks so much for watching.